Welcome to TradeTheNBI.com. This is John. This report is for the 15th of the month, and while we continue, this slow consolidation at this particular point, coming off of the slight increase, and very close to that breakout point now. Certainly, we had even overnight more North Korea issues, but you can see even in that kind of severe. I guess you would call it fear moment. We're really not seeing a huge amount of activity based on it. While it's upsetting and all, again, like I said before, when we were back down at the bottom and everyone was terrified that the market was about to collapse, I pointed out clearly that in a growing economy, it's pretty tough to trade against it and be successful. And I know there's a growing amount of pessimism, but it's always in that fear and pessimism that you get a slow rising market as it goes counter to that trade, because that's how markets work generally, counter to conventional wisdom, simply because there aren't that many people that control how things go. And just because the mass population believes a certain thing, if the people with money are doing the opposite, then, well, you're going to get what we're seeing here. The NQ is still weaker. As you can see, it's not making the same highs that the ES is making. It had a much better DOC reading, but now we're starting to get a little breakdown in it. So potentially we could see a little more softening. The shakeout here has been pretty flat, indicating that there's no real trend in place at this particular point. Just kind of sideways bending. The euro definitely being held up in this range. Anything below the 120 certainly puts it right in the range that would be expected, but really the normal trading range is down much lower. So this is helping keep the market a little bit more elevated, because that does favor a lot of the S&P companies. A little bit of recovery on bonds simply because of the extra fear quotient, but you'll notice that the narrative in Washington has softened quite a bit, and that certainly has, I think, stabilized things as well, because you're not getting the big rhetoric in that, and I think that's calming the markets to some degree. The real question is how long this can be sustained, given the potential pressures. We just saw come out the largest increase in inflation. With the potential growing economy, we'll see how much noise the hurricanes create, but I think the general indication is that we're starting to see significant potential growth, and as soon as that begins to take hold, and or we see that the labor supply can't meet the demand, then inflation is going to start rising very quickly. And the Fed has already been active in that rate raising scenario. So the question is, will they continue it, or will they pause a little bit to provide like a little relief for the disruption of the hurricane? We'll see. They may just ignore that detail because it really shouldn't have too dramatic an effect, especially since a lot of those things that for rebuilding them that are going to be subsidized with that quick aid package, and there could potentially be another one coming forward for Florida. So that will have a positive growth aspect come the beginning of the year. So something to keep in mind. Oil, obviously, boosting out towards the high end of the range here. We talked about it staying within this. Still looking forward to remain there, but you can see we're already moved to an oversold condition and a new buy setup within oil, so the potential for it to break out here, definitely a possibility. And gold, some people expected it to completely collapse, and obviously with the North Korea thing definitely taking a little bit of a stronger turnaround. We're not expecting a whole lot. We had some positive extremes to fill in, and that was about the extent of it. I still think the prospects for gold long term are definitely exciting. Well, so here you can see the missile launch from North Korea, and all it did was come back down to test stop levels. Really didn't hit that many, and so the reverberation right back up, not too big a shock, given the fact that really don't have anywhere else to go, and this really becomes a boring theme, but something that I try to keep pointing out, because there's just so much news, so to speak, to the opposite. And I think that we just have to go with what we're seeing on the readings. While we have a flatness to where things are at, it's not gloom and doom, so to speak. Let me throw up the 50K. Let me put the other one that has the actual Opus trading on it. So it had bought from the beginning of this run down here, and increasing stops on a regular basis now as it goes forward. Haven't looked at the performance report, so why don't we go ahead and do that? Can't hurt to see where it is. So periodic returns so far for this year based on that. And again, this is one of those where horrible win rate, and a little bit more volatility with it. When you have trending markets, it tends to work better. The MBI Opus, on the other hand, which is more mean reversion and looking for choppy action, has done much better in this sort of back and forth, because it's exactly what it likes. It likes the little flip overs, and you can see a huge difference in the win rate. Profit factor is very decent. I think we're very close to potential of new equity highs I wanted to show, because we do obviously have a new Starhawk that entered in right here on that reset of the DOC. Though we can see that we were looking pretty decent, but we didn't get the crossover, so it could be delayed here with the rising cyan on that setup. So all in all, I don't think you're in a bad shape at this point. We're starting to get a little bit more narrowing for a short period of time here, but that's only going to lead to a new explosion, and it's just a question of how many people are trapped in an indication. The problem that we have with it is from that daily chart, we had our buy signal come through, and we're not getting the follow through with the cyan falling underneath green and or red starting to rise. But short-term buyers in that have reset. It's not going to take much, just a couple of positive indications, and I think that once you break through and get towards that, past that 95.50 has been the resistance at this particular point. You break above that, and I think that you're going to get pulled over the 25. Now, how long the 25 lasts once we get there, it's more of a psychological thing. It's just once you get to these levels, you tend to be drawn to that even number. So, and I think there's probably, and that's really what we're going to be testing, is how much selling takes place at that or a break above that, and whether or not it's also short covering, and that would really propel us, towards that 25, 15, 20 range really quick. That's the long and the short of it at this particular point. So all in all, I think the market is doing pretty much what we expect, and of course, you're never going to have the upset until everything starts to break down, but we should start to see that. If we get orange rising above then, again to the plus 13.5, then I think we can be starting to look for something as an increase in volatility range. Even having it above the plus 7.5 tends to create a little bit more volatility moves, so we'll definitely be watching that from an intraday standpoint. But short side's been a little bit tougher, I think, simply because we're just not expecting as big a down range. It's not that the signals aren't accurate, they just aren't giving you as big a move. But you don't want to miss out on them, because at some point they will start to create a significant move. I think it's just you've got a lot of positive headwinds that really prevent utter collapse on things. As always, though, trade well and look for me on the Skype chat.